This is the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Any postings and or social media content are the views of the advisor and do not necessarily reflect BMO's position or viewpoint. The information herein is for Canadian residents only and does not constitute any financial, legal, tax, investment, or other advice. And we're back at it, the Wealth Roundup for the week of November 26th, 2025. Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns, back from vacation to take a look at the markets as we approach the end of November. It's been kind of a wonky month, especially the past 2 weeks that we haven't spoken while you've been on vacation. Little up, little down, but over the past month, flat. 3 months up 10%. Last month, flat, though, right?
Yeah, the last time I took a break for a holiday between the podcasts, the markets went on a bit of a rip, and we joked I should go on holidays all the time. You're right. This time, it's been rocky, and pretty hard to find any safe ground, probably for a lot of different things. But, when we look at the broad equity markets, so both Canada and the United States, both off their highs. There's been a little bit of a recovery since, the S&P 500 dropped almost 5%. And so it's kind of picked up a little bit. The TSX got brought into that vortex as well. And then, we often talk about, where Bitcoin and gold are at, both well off their high, Bitcoin really getting taken out to the woodshed and beat up. So, it looks like gold bullion has found a floor in around that 4,000 US. So it's kind of regaining some momentum, but still well off its highs that were pretty close to $4,400 US an ounce. And then Bitcoin significantly off its highs, trying to find a floor. We saw 100,000 US as kind of the previous floor. Well, it's blowing well past that now, trying to find some stability around $80,000 US. So, for a lot of people that are, kind of holding US equities, Canadian equities, and these commodities, is that, it's been a rough couple of weeks.
Yeah, if anybody ever wants to buy Bitcoin, I just dabble with a little bit of extra cash, just nothing too significant. But if anybody ever wants to buy Bitcoin, wait until about 2 weeks after I've purchased it. That's the dip.
Yeah.
When things go south.
You should become an anti-analyst, Terry, with regard to Bitcoin.
Well, that's why I'm talking to you. I'm not the analyst in this conversation. The volatility and negative sentiment that the markets have been experiencing here, is it seasonal, or is it because it's, you kind of mentioned it's been both the U.S. and Canadian stocks. Is it to do with the government shutdown, or the leading up to Christmas, or what is making it so weird right now?
So, great question. I think a couple things there to unpack. I do think that the U.S. government shutdown, going on longer than expected, did have a significant impact. And, we've kind of talked about this before. One thing that the markets definitely do not like is uncertainty. And so with the shutdown going, 40 days, beating the previous record of 35 days, I don't think that was anticipated. I remember kind of early on, a lot of the speaking heads, were talking about, 2 to 3 weeks. And so when this thing kind of pushed and was going well past 35, and then there seemed to be no end in sight, is that we did start to see, the markets being concerned that now there would be missing data. So missing data in around inflation and missing data around jobs. So while some of the September data has come out recently, is that we're never going to see the October data now. They've just decided that they're not going to produce it. And so often in the investment world, especially from a institutional side, is that a lot of these things are model driven. And so they take inputs on various things that have to do with confidence and earnings and inflation and rate direction. And so when all of a sudden some key components of that formula are missing, the market kind of decides to protect itself a little bit. It takes some money off the table. It certainly is more cautious about putting new money to work. And, another thing we've kind of talked about is the general direction of the markets with regards to interest rates. So with our last podcast, we were probably talking about an interest rate cut for the Bank of Canada and an interest rate cut for the US Fed here before the end of the year. And it was probably an 80 or a 90% probability. And all of a sudden, those probability levels, at least for the Fed, they dropped well below 50%. So now that Fed rate cut was being taken off the table. Well, the markets do not like that at all. And where some of that was is still some concerns about the stickiness of inflation. There was some I would say some well-respected heads of some investment firms. So I think of the president and CEO of Goldman Sachs. He came out and says, we expect inflation in the United States to stay sticky. But without those numbers on inflation and jobs, I think that the market got concerned. And so what we've seen happen here maybe in the last couple days is maybe that probability of a rate cut in the U.S. has returned, not so much because of the inflation side, but because of the job side. And with the U.S. Fed having this dual mandate of kind of protecting the job market and price control, now the chances of that rate cut happening at the end of the month have kind of buoyed the markets to a certain degree. So I think that's that. I think the other part is we came pretty much to the end of earnings season. So, probably 98% of the earnings are in the bag now. So the market looking for that next catalyst of what could drive those markets higher, because we're not going to get anything. And if we don't get that rate cut, then that's a long period of time that the markets are going to sit without some kind of tailwind coming in behind them.
What about the Canadian federal budget being passed? That maybe in a combination of the government shutdown ending in the States. Is the combination of those two, or those two things separately? I know you just talked about the government shutdown in the U.S., but is there a combination of the two things that can affect both economies here in Canada and the U.S.?
Yeah, I feel terrible about saying this, but sometimes it doesn't really matter what's happening here in Canada. If the U.S. catches a cold, we catch a flu. Apparently, there's a Supreme Court decision in around tariffs that is looming. Whether or not that actually leads to anything, even if the Supreme Court were to come out and say that Trump's tariffs are not legal. There's part of me that thinks that administration will find another reason to continue to keep the tariffs in place. I think the tariffs are still an issue here in Canada. With the budget, I think there's some underlying things of the budget that were maybe kind of missed. I think a lot of people are saying there wasn't a lot really new in the budget. There wasn't really a lot of meat to this budget. But when I kind of dived into the budget, there were a couple other things too that didn't seem to get a lot of press. There was a modest tax cut on the federal tax rate to medium income earners. That's stimulative. That puts more money in people's jeans. There was some tax incentives for businesses to invest in their business, credits with regards to research and innovation. Again, things to go and help the business. I think those are really key. Now, whether or not they weren't necessarily new, they are things that are showing that the government is focusing on doing things to increase productivity and to think about affordability. I think the other thing that was interesting, probably a little bit controversial too, is that generally in the budget, you don't see as part of the budget talking about immigration targets. Like it's not really part of going and balancing the budget. We know that we're going to do $78 billion in deficit spending, but they made the comment that, they need to do something on the job front. So they've got to right size immigration, which kind of take that away. And that's not usually something that comes up in the annual budget, but clearly it's something we have to be hyper focused on because, we've got unemployment that's over 7%. And the bulk of that unemployment is young people, looking for that first opportunity, that first job. So I think that with the budget, we had to be prepared for some deficit spending. It was a big number. It could have been worse. So there wasn't anything coming out of that budget that maybe, talking about those catalysts. There wasn't that big piece of news. Although I think had the U.S. still been in their bit of a malaise, it wouldn't have mattered. Coming out of Canada.
You talked earlier about earnings, how 98% of the earnings are out for a lot of the companies that, people invest in. And one of the things that people are talking about more and more is AI. And Nvidia is one of those companies that's spearheading the AI front. And as Nvidia goes, so goes AI. And I read something that Nvidia's earnings were not as high as they thought. And that in turn had an impact on stocks, the economy to, maybe from, a fine point to a more broader point. Is there an AI bubble happening right now with all of this AI business?
With Nvidia specifically, is that Nvidia has really benefited from the tailwinds of AI. So, last kind of, most of us didn't even know what Nvidia did 5 years ago. Now they're the world's most valuable company. That's an amazing story, right? And so they've really benefited from the fact that they build really good chips. They build chips that are going to be the foundation blocks for the future build out of AI and quantum computing and the continuation of cloud computing. They're a market leader, and their order book continues just to fill up with new orders. And so, their earnings have been great. And what's going to be important to their business, like with the other hyperscalers. So we often use this term hyperscalers when we talk about the big tech companies in the US. So, we'd add Alphabet to that. We'd add Apple and Microsoft and Netflix and Meta and Tesla into that particular group. They've all really kind of very much benefited from this AI trade, but it's become a bit of an arms race in that they are all trying to compete, be the first. Along the way, there's kind of casualties when you're looking for market leadership, and so I think what has come up is that, especially in the last 6 weeks, is you've seen all these AI deals being done. So, and new spending, new commitments to spending. And so this arms race is coming at a huge cost. We've talked, at length, and we'll continue to talk that, I want listeners of the podcast to be thinking about earnings, fundamentals when it comes to the future direction of the stock market. So earnings are a byproduct of revenues and also your expenses. So what are your profits that are coming off of maybe all of your sales? And so if you're having to spend more money on hardware, if you're having to spend more money on programmers, if you're having to spend more money on energy, if you're having to spend more money on chips, and you're trying to win this race to the end, is that you better be getting the sales. You better be getting the attrition from your consumers using your product. And the concern is in the AI bubble is that there are probably going to be some casualties to this AI race. And you don't want to be that business that AI is a headwind to, right? And, I think about the software business specifically. We really like Microsoft as a business. They very effective at rolling out new products. But, the idea behind software is you have somebody that writes some code to help make a task easier, to make you more productive. Well, AI agents, it's more of an outcome solution. You're not asking to build something to help me find the solution. You're asking AI write for the solution. There's nothing more productive than that. And so you can kind of see that unless you find a way to kind of pivot and evolve, your sales could decline. And certainly even if maybe your sales don't decline, your margins, might compress because you're having to spend so much money to compete. And so I don't see an AI bubble in the same way that maybe the .com bubble was created and eventually burst because there was just no revenues. There was a lot of hype and not a lot of meat. Here we have huge revenues, but we're seeing almost just as big of expenses. And I think it's those costs and specifically those margins which are going to be really important to determine, who's going to be the winners of this and who's going to be the losers, because I don't think it's winning all across the board. And then the other thing that, I get concerned about is, what's the adoption to AI really going to look like? Like this is different than just you and I going on and asking Gemini or ChatGPT for something that, we're too lazy to look up ourselves, right? And it's just so convenient. You just talk into your phone. You don't even have to type it anymore, right? But am I paying for it? Like, where am I paying for it? And if I had to start paying for it, would I use it? And that's going to be, that's to me where the tire finds traction is that we're gonna have to start paying for it. It's, when the service is free, like even thinking when Netflix started increasing their fees, I really, really like Netflix. Whoa, price is going up. Or I really like when music's maybe free, but now I got to start paying for it. Or I got to start listening to more ads, right? If the product is still really good, I'm going to pay for it. I'm going to listen to the ads, right? But if the product isn't offering me the value, I might have to just say, rather than having 5 streaming services and paying for all 5 streaming services, I might only pay for 2. That means there's going to be 3 that are going to fall to the sidelines. So,
well, you hope history doesn't repeat with the dot-com bubble to the AI bubble. And I think these companies always have to remember that one of the most important things is not necessarily being first, but it's being right. And sometimes the people who are first aren't always right. And the people who are not first end up learning from it and end up going ahead. So
natural selection, right? Very, very Darwinian. Yeah.
The Wealth Roundup for the week of November 26th. Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. We'll talk to you again in a couple weeks.
Thanks, Terry. Enjoy your holiday.
This has been the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. I'm Terry Evans. The Wealth Roundup is part of the Reluctantly Podcast Network.